understand IBH and IBL and how to incorporate it with the VP?
I do not.
Okay, good enough. All right, so the rule is, I'll write them out, is you're grabbing 9:30 a.m. to 10:30 a.m. Eastern time. Grab high and low of this time duration, okay? Okay, does this make sense to everybody now? If I was to give you this, could you picture this and draw it? Lorenzo, could you do it?
I'm a little confused on the middle part. 88% chance that it does what?
That the low of the day is the IBL.
That will be the low, like, for the whole day. It won't go lower than that.
That's correct. Same is true for opposite. If the candle closes below IBL on 5-3 minutes, 88% chance the high of the day has been set. Does it make sense now? Could you draw it, picture it?
Yes, I'm writing it down.
Okay. So now, if you guys just take a look at this. Let's see, this was Wednesday, right? Well, I think, yeah, this is Wednesday here. Okay, so this is our Wednesday here. So this was your IBH, just to kind of give you guys a visual of it. And this is your, let's see, I think this was the low here. Yes, and I think we traded this. Yeah, we did trade this. We knew we knew here the candles went above it, right? So you guys see the candles closed above it. And how can you use this for your trading? It's about probabilities, guys. So now if you know that there's an 88% chance that this low is the low of the day, if you're holding this low, if you come here and you're holding it, this is a trap. There's a 12% chance it's going to make a lower low and 88% chance that it's going to hold this. Which side do you want to go? What should you do when this happens?
Go long.
Yeah, ideally you want to go long here, right? And then, I mean, you can add the volume profile here to kind of help you with the same. So here we, if you look at the volume profile in this instance, you popped from here, you created an imbalance, you came back right to it, and you see you had a nice little run up. I don't know how much, about $1 by $1 or something from the POC right here, and then you dipped below that. But there's one more step that you want to mark on the chart, is you want to mark the highest body in the same range. So if you mark the range here to here, so this would be the lowest body candle of the day of 9:30 to 10:30, and then the same. I won't mark this one because this candle seems very high or very close. Oh, I can, I guess. Be very close. So this would be the inside range where the liquidity is, and if they come back to this here, if they come back inside this range when the fact is met that it closed above it, they're most likely, and I'm telling you this, most likely a 5-minute or 3-minute candle is not going to close below this inside candle right here, inside line here. And look at this. Did we close below it on 3 minutes? 5 minutes? Candle will not close below it because they just came back to fill that. There was probably an imbalance on the volume here on a big, break that they left. They came back to fill that, but they never filled below this candle here, below this body. They came back and pushed it right higher. And what did we do? We drove back to the high of the day. So if you knew this rule, right? And let's say you play it. So how would you play it? It's super, super easy. If you wait for this, an 80% rule, and you utilize volume profile, you should never have FOMO. You should always have a plan, and you become a trader you let the trades come to you instead of you chasing, running, taking in the middle, and that sort of thing. So if you look at this, if I'm long here, right? Let's say I'm long right here, and you can use a trigger of your choice, right? If the trigger right here, right? If you're waiting for this POC, let's say I'm grabbing from here, I'm going to grab to this candle again. If your trigger, let's say you're incorporating volume profile for this, I'm giving you a real life scenario of trading now. If your trigger is once you reclaim this POC, I'd like to go long on it. Well, that's okay. That's a good idea. So you wait. Hey, you see the candle closed above. You're pretty sure that you might get a bounce here, and you did. 88% chance. Now, that doesn't mean you blindly go in. You could use 5-minute, you could use 3-minute candles, right? If you use 3-minute candles in the break of the high and put a stop loss right below it, that could work as well. If you incorporate volume profile, you want to kind of be on a retest of that volume profile. You want to be going long. And a lot of you struggle with the fact that you're like, man, what if it doesn't come back? Well, okay, it doesn't come back, then you have no reason to be in the trade. That's how you look at it. There's no reason for you to force it to be in the trade. There's going to be another opportunity with the same setup that you're looking for, and it might come back and you take the trade. In this case, this popped over, came back, and then proceeded higher. So now if you look at your long position, let's say this was our, grab the wrong thing. If this was our long position right here, and this was our short right here, anyone that would not take this trade? Probably not.